Hey, what's going on? We're going to be talking about the psychology of a crypto trader, how things go, and how we can manage our emotions and avoid FOMO. FOMO is going to be fear of missing out. And it's pretty much going to be like say, for instance, a candle burst straight up, and you're going to be emotional. You're going to be excited to get in because you're going to be thinking money, 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 instead of thinking discipline, 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 discipline. So I'm going to be talking to you guys about how you can manage your emotions and turn those cringe emotions into discipline. So this is going to be a deep dive into the cognitive biases, emotional pitfalls, and some practical strategies we can do to maintaining mental resilience in volatile markets, such as the cryptocurrency one. Let's go. So the emotional roller coaster. The cryptocurrency market is a unique ecosystem, distinct from traditional finance, due to its 24/7 nature. So the stock market operates Monday through Friday, and same thing with forex. Okay, forex and crypto, forex, stocks, and futures, I meant to say, all operate Monday through Friday. Cryptocurrency operates 24/7. Okay, so whenever your levels get hit, as far as your take profit, say you're in a long trade, okay, and you're trying to close at an area of resistance above current price, okay, if take profit gets hit at 2 a.m. in the morning, you need to have your alerts set on your phone. Okay, your alerts are going to be a big use. Okay, so what you can do is get on your phone, okay, or do it from your computer, whichever one, and just get the app of whatever brokerage you have, or get the TradingView app, okay, whichever one. Then from there, whatever stock that you're on, find the level that you want to close at. Okay, you should know where you want to close at. You should know where you want to enter at. Okay, and you should know where you want your stop loss to be, which is going to be a place where your trades is going to automatically close. Okay, and you should know where you want to automatically close for a win as far as an exit. So if your take profit gets hit, you need to get up and close your trade. Okay, you cannot be lazy when it comes to cryptocurrency. If you're deciding to play a 24/7 market, you need to be ready to 24/7 close your trades and manage your trade. Okay, so if you don't have limit orders set as far as stop loss orders and take profit orders set, then you need to make sure you're on top of it. Set your alerts and do what you need to do in order to succeed. So it's a lot different from the traditional finance system due to the fact that it's 24/7 once again. Has rapid price swings, and the influence of social media can make certain cryptocurrency coins or tokens or meme coins just skyrocket due to its popularity. And the more popularity something has, inshallah, a lot of the times the market cap is going to increase. Higher the market cap, people are going to trust it. Okay, the more trust something has, a lot of the times more value it's going to have, because people are going to feel more comfortable with parking tons of money within there. Okay, don't go into a state of euphoria whenever you're trading too. So even if you're making large amounts of money, okay, you're seeing your bank account go from $100 to $1,000. Let's say you held the trade for a good while. Okay, you're like, whoa, cryptocurrency, you did yourself a nice withdrawal. Okay, put 30% away for taxes. Okay, every time you withdraw, put 30% away for taxes. Whatever your withdrawals amount is, put 30% away for taxes in some different bank account. Okay, really 50% of that in a whole other bank account. Keep breaking down your money like that. So this environment amplifies human emotions, turning every price chart into psychological battleground. And understanding the emotional psyche of the market is going to be the first step towards achieving a disciplined mindset. Okay. So euphoria is going to be a state you can get into, especially once you start making money, just like I explained. So euphoria can be a state of overconfidence when prices start to soar within an upwards direction, often leading to reckless decisions and over leveraging. And it's the moonshot mentality that precedes a sharp correction. Let's talk about anxiety and fear. The immediate reaction to a market downturn, it's a psychological response to losing money, often triggering panic selling. Okay, so if you see market dumping down and you're in a long position, relax. Okay, if you don't have your stop loss set, okay, just understand that, you know what, I'm risked in for this. Okay, make sure you have your risk management in place and understand that drawdown might be inevitable sometimes. Okay, you're never going to just enter in and always see profit. Sometimes it's going to be drawdown, but by the time you close your trade, it should be in profit. The trade is only over whenever you close. If you're in drawdown, that's fine. Okay, make sure you mark your levels of support below current price or resistance and tell yourself, you know what, okay, if price breaks these levels, I'm going to go ahead and close. Okay, don't panic though. And denial. Now, if price decides to break your levels, you have to close, because that can lead to denial. And that's the refusal to accept that the market's falling, which causes you to hold onto a losing position in the hope of a miraculous rebound, or hodling with no plan. Don't do that. Okay, that's trading out of desperation, not of a logistical plan. and which is going to lead you to a cycle of despair, which is something I put myself in when I was being ego driven and not learning from my mistakes instantly. And that puts you in the final stage where people sell at the lowest point of the market. Let's say they're in a long position and market decides to dump. Okay, people are just selling way past their stop loss, selling at the lows, and just blowing up their account, all because of the fact that they were overconfident in the first place. Okay, let's say they had a nice winning streak, thinking they were the best trader of all time, started taking some losses, couldn't really handle the stop losses, started doubling down. That could lead you to denial. Okay, denial could make you double down, put on more size than originally needed, and then you could lead into a cycle of despair, blowing up your account. Okay, so don't do that. Stay disciplined. Only thing that should ever change is the contract amount. Your setup criteria should always stay the same, no matter what. It should always stay the same. So fear, uncertainty, and doubt. All right, God got you. You're gonna be cool. Okay, even if you go back to zero, you can run it up again. Okay, you're not trying to go back to zero, but understand you can run it up again. So it's a powerful psychological tactic used to spread negative information and create panic in the crypto world. Okay, fear, uncertainty, and doubt often come from the form of news, report, social media posts, or regulatory rumors that intentionally mislead. Okay, so if you ever see like the little posts like certain amount of money was wiped out within the crypto market today or stock market today, ignore it. Okay, market is going to go down. Market has to go down in order for it to bounce back up. Okay, it's not just going to go up in a straight direction forever. Okay, price might want to come back and retest an area of resistance below current price and sweep up higher, breaking new highs. Okay, it has to create liquidity. It has to gain ammo in order to break up further. That's all price is doing when it's going down. You have to think of it. People are in from like $100 too. So if price is at $100,000 and it dips down to $70,000, that's just people taking profit from whoever's in at $100 a share or $100 at value, whatever you're in. Okay. And this manufactured fear can cause otherwise rational traders to sell their holdings, creating a self-fulfilling prophecy of a market crash. And the whole time it's not. It's just leading to a new low that people are going to go ahead and buy who actually understand the charts. And if you want to understand the charts more, head over to StackMODE.net. So you can learn to differentiate legitimate concerns from baseless rumors. Check multiple reliable sources and question the motives behind sensational headlines. Now, if they said something like cryptocurrency is banned, okay, so that'd be really, really, really different. Okay, and stuff like that, where actual laws are in place, okay, then that news is different versus just like, oh, a good crypto market lost $3 billion in the market today. Market has to dip down. Okay, all this is people selling. So fear, uncertainty, and doubt exploits the human brain's natural aversion to risk, and we're wired to avoid danger, and a perceived threat to our finances can override logic. And fear, uncertainty, and doubt as a strategy. Large institutional players or manipulative groups can strategically release FUD to drive down prices, allowing them to accumulate assets at a lower cost. So once again, it's just people willing to just buy the low again. So for example, there's been a China ban rumor going around, and for example, people would say that China bans crypto. Okay, and despite being old news or misinterpretation of the policy, these rumors repeatedly trigger sell-offs due to widespread fear, and traders who sell based on this FUD often miss out on the subsequent rebound and miss out on the lows. Okay, so do your research and read the chart. Okay, don't just go off of news. Read the chart. And FOMO is perhaps the most dangerous emotion for a crypto trader in the first place. It's the anxiety that an exciting or profitable event is happening somewhere else. And it's a feeling driven by the fear that you will miss out on a significant opportunity. In the trading, FOMO often leads into buying an asset at its peak, just as its price is about to correct. So a primary driver of FOMO is social proof. Okay, don't hop on a trade just because you see your friend hop on a trade. Do your research. Make sure it's something that you would get into. Make sure it's a trade you would make. And a primary driver of FOMO is when you see others celebrating their gains on social media. You feel a strong urge to join them, believing their success as a blueprint for your own. And the urgency trap. The feeling that you must act immediately, now, today. And the price chart shows a vertical ascent, creating a false sense of urgency, overriding the logical process of market analysis and risk assessment. So you don't got to trade every single day. You don't got to trade immediately. You can wait for a certain level that you want to. Get in there. Do your thing. Take your time. Be patient. And scarcity. Okay. Now, Bitcoin, for example, is going to be a limited resource. Okay. So the idea that a particular asset is going to the moon and you need to get in before it's too late is going to be a powerful psychological trigger. Okay. So Bitcoin is going to be a good example of that. It's kind of like a gold or diamond. Okay, that's just digital. So that's all Bitcoin is. It's kind of like, yeah, digital gold and diamonds, and it's just a limited resource. Yeah. But certain other meme coins example might be trying to trigger a rally. And during a meme coin rally, a trader might see thousands of posts from different people. Sometimes people hack influencers. Sometimes people run ads that are paid ads, okay, in order to spread the meme coin, okay? And I've spoken with these individuals, okay? It's not something that you want to get into. Just invest with things that have a future, market cap, and companies involved into it. Try not to play meme coins. I don't recommend it at all, okay? So with meme coins, the investors, you can also see a large percentage of the pool who's invested into it. Let's say the people who created the meme coin, they own 60% of it. So what they're going to do is get in at the bottom, and by the time the meme coin goes up, okay, by people getting in, by the time ads explode, by the time influencers start posting, etc., they're going to be up a crazy profit, because remember, this is the left to right chart. So they're going to be in from the start, the jump. So since they're in from the jump and you get in at the highs, they're going to go ahead and sell, and since they own 60% of it, they're a whale. Okay, and what a whale is a shareholder with a lot of value. So since they own a large percentage of it, if they sell, it's going to go ahead and dump too. Okay, so by the time they make bread, and it's trading, so if someone's making money, someone's losing, and if someone's losing, someone's making money. So whoever got it at the highs, by the time they said that the meme coin would be decent, will go ahead and get what's called rug pulled and pulled back on. Okay, and the people who got it at the bottom, who created it, who own a majority of it, would go ahead and make money. So a trader might see thousands of posts from people, okay, trying to make it seem like the best investment of all time, and it's not. Okay, do your research on actual things that help the future out, that help people out, and try your best to invest into that, not meme coins trying to make some quick bread. So loss aversion and sunk cost fallacy. So these are two cognitive biases that are often intertwined with each other. And loss aversion is the psychological tendency to prefer avoiding losses over acquiring equivalent gains. And for a trader, this means the pain of losing $1 is far greater than the pleasure of gaining $1. Okay, so you're not even feeling your wins, okay, but you just want to keep losing. Okay, so you want to keep losing due to the fact that you're not satisfied with how much you win. Okay, so sometimes you might make some money within the market, right? And I've had some traders be like, you know what, it's not enough, and keep trading, keep trading, keep trading. And then the loss comes, and then they're super salty. It's like you were already up bread, but you just weren't satisfied with it. Okay, and the discipline and the consistency is what's going to get you to be satisfied with your P&L. If you don't like the numbers you're seeing right now, be consistent for a couple of months, and they will change, inshallah. Okay, so the sunk cost fallacy is also the belief that you already have invested a certain amount of time, money, or effort into an asset, and you should continue to invest in it, even if the asset is clearly failing or not a productive asset. Okay, don't do that. Don't hodl. Invest into a position that you know is going to have some future value, and hold it until your take profits get hit. Once your take profit get hit, go ahead and close, and have your stop loss set. No, you know what? If price decides to go to this level, I'm just out. And loss aversion in action. Holding on to a position for months or years, hoping for a return or break even, this prevents capital from being reallocated to a more profitable asset. Okay. So this money could be going into something that's profitable, something that's actually holding some future value and helping out society and human beings. And you can go ahead and make some breakthrough there. Okay. So money is going to be available through the future. And sunk cost fallacy, let's talk about an example of it. So for example, let's say you were down 50%. Okay, and then you say, well, you know what, I'm already down 50%, so I might as well hold. Okay, I remember our first trade ever, me and one other person I started to trade with, we making like 3 figures a day, like $500, $400, like our first trade, completely oversizing and stuff like that, just playing some SPY 0 to T. And I remember the one time we held our trade down to negative 100%. Okay, and if you're on options, you know that means the contract goes worthless. Okay. And when that happened, we were extremely shocked because we were just making good money. Yes, we didn't know how to withdraw and stuff like that. It wasn't on a logistical system. So of course the money just went to zero. Okay, so it went to negative 100% for contracts. And I remember I was outside getting some work done on my car and looking at the position, and I was like, okay, you know what, the money was already gone. So, and I remember seeing like, you know, I'm down, let me just keep holding in case it sweeps up. And little did I know, it went to negative 100%. So that's not going to be the mentality. Okay, unless you size for that. Okay, let's say if you're on options, for example, the contract costs $70. You're okay with losing $70. Okay, then that's different. But if the contract is $300 and you only want to lose $70, and it's $70 stop loss gets hit and you don't close and then you lose $200, you're going to be mad, okay, or sad. Okay, don't let that happen. Just follow your rules. Okay, follow your rules. Follow your rules. Because this rational thinking ignores the money that's already gone and that's holding an unprofitable asset. Okay, and manage your emotions. Here's some practical strategies. Okay, pray to God you're on the charts, clicking buttons and being able to make money on the screen. Okay, so be grateful and don't lose yourself. And combating emotional trading requires structured and disciplined approaches. It's not about eliminating your emotions. We're all human beings. Only God is perfect. But it's about controlling your emotions and preventing them from dictating your decisions. And here are proven strategies to build your mental resilience. So once again, pray to God and be thankful that you're able to make money on the charts in the first place. And then develop a trading plan. If you're a retest trader, play your retest parameters. If you're a breakout trader, play your breakout parameters. If you're a reversal trader, play your reversal parameters. Okay? Do what you need to do. Trade how you want to trade. If you're a trend line trader, trade your trend lines. Okay? Do what you need to do. Okay? Once you find your profitable strategy, go ahead and stick to that. Okay? Farm it, run up your bread, but stay consistent. Okay? Don't oversize. And if you're futures and forex especially, you don't want to get what's called margin called. And that's when you have to have a certain amount of money in order to open a position in the first place. And if you don't have that money available, you can get what's called margin call. So be careful and set your stop losses, especially on forex and futures, because if you get margin called, you can definitely owe the broker money, and you're not trying to owe the broker money or go to court for no reason or worry about the law. Okay. And do your own research as well too before you hop into anything. Okay, because if you get in a trade because someone else said it'd be good, you're going to be upset at them. Okay, so you can only be upset at yourself. Okay, do what you need to do and get in what you believe in. And the 24/7 nature of crypto can be exhausting. So set alerts, use time to your advantage, and step away from the charts. Okay, go grind bread in real life, go grind your business, do whatever you need to do in order to get some more comfortable, so then you can put some more money back into your account, inshallah. And the power of journaling and mindfulness. So a trading journal is a critical tool for self-awareness. And it's not just a record of your trades, but a log of your mental state, emotions, and the rationale behind each decision. Reviewing this journey and over time, day by day journal helps you identify recurring emotional patterns and correct them, okay? Or see positive behaviors, okay? Positive or negative behaviors, either one. So log your thoughts, log how the trade made you feel, log how much money you made, log how you were thinking, okay? Log how you were feeling, okay? Were you feeling happy? Were you feeling sad? Okay, were you feeling pretty neutral after the trade? Okay, depend on however the trade went. Let me know in the comments below how trades normally go for you guys and how you like to structure your journal. So mindfulness and meditation. So these practices can train your brain to observe thoughts and feelings without immediately acting on them. Okay, this is why it's really important to wake up and pray to God. Okay, it's gonna bring a lot of gratitude, bring a lot of discipline, and just come on to the charts and come into the world with just a humble mindset. Okay, we can make 100 M's and we're still going to come on and do the same thing every day and grind hard. Okay, like we have zero. Okay, we're still going to be disciplined, still be hungry, and the only thing that's going to ever change is our P&L. Okay, regular prayer and breathing can significantly improve your ability to stay calm and rational during market volatility. Okay, you can ask God for any assistance if you're feeling any type of anxiety. If you're questioning yourself and feel like it's not for you, you're good. Okay, God put trading in your brain for a reason. Okay, we're all blessed with intellect. It's like Quran says, and you're gonna be fine. Relax, stay focused to the plan, and don't give up. Okay, let's talk about social media. Okay, detox from it. Okay, get off of social media. If you feel like it's ruining your brain, get off of it. If you post on social media, post and get off of it. Don't scroll. Don't sit there and look at this stuff. Okay, just post and get off of it. Okay, a lot of the times it can be nonsense. And only trade what you can afford to lose. Okay, this is the golden rule for a reason. Don't be trading with your rent money. No trading with grocery money. Okay, no trading with any money that we need to survive. Okay, because it's going to be horrific if you were to take a loss, you'd be sick. And question everything. Okay, be a skeptic. Question the narratives you see, the price action you observe, and most importantly, the emotions that you feel. A healthy dose of self-doubt can prevent irrational decisions. And celebrate your process, not just your gains. A positive reinforcement loop can be built by celebrating good decisions, following your plan, sticking to your stop loss, ignoring FUD, regardless of the outcome, and pushing forward. Okay, ignore the FOMO regardless of the outcome. No fear. Okay, no doubt. Just keep going. Keep going. Trust God and keep going. No fear and no doubt within your mind, your heart, your soul. Okay, just keep going. And the journey to becoming a successful crypto trader is really a psychological one. The technicals are going to be extremely easy. I have a lot of technical videos, or you guys can head over to StackMode.net for all trading education. You guys can also get my free trading ebook, free course. Okay, it's going to be a lot of stuff you guys are going to be able to get there. And the market is a mirror. It's going to reflect your mental state. Okay, if you're an impatient person, it's going to show you. If you're not humble, it's going to show you. And by understanding and managing emotions like fear or doubt and FOMO and overexcitement, you transform yourself into a reactionary participant into a disciplined, strategic investor. And the ultimate goal is not to predict the market, but to master yourself. Stay prayerful to God, keep grinding, catch you in the next one. Peace.